Hello and welcome to Business Today Television on India Today Group. I'm Karishma Asudani and joining me is Secretary, Department of Revenue, Mr. Sanjay Malhotra. We are talking about the Union Budget 2024-2025 and interim vote on account 1. Thank you, sir, for speaking with us on Business Today Television.
My pleasure.
I'd like to start off by asking you, and Mr. Malhotra, you've said this yesterday, even in the press conference, that it's been a confident budget, a realistic budget, a budget that promises fiscal consolidation over populism. Was this a teaser to what awaits us?
No, this is only an interim budget. So, I would not like to call it a teaser. All the budgets that have been presented by this government are, very realistic. You have seen it in the numbers for last year and even, this year. And similarly, next year, whatever were the projections that were given, especially with regard to fiscal deficit, I think, you are pointing more towards that. The fiscal deficit numbers have been maintained. The glide path was already given. And so we are on track, towards meeting the glide path. Insofar as revenues are concerned, again, it has been our endeavor, and thankfully, we have been able to meet our targets last year, this year, and hopefully even next year.
Great.
So, of course, kudos, and thanks to your viewers, the taxpayers who have contributed significantly in this regard.
Right. So one of, I think, the key highlights was on the tax to GDP ratio, which has been the highest, and clearly the department is happy about it. Yesterday, you were also telling us about buoyancy being really well in terms of close to about 1.4 this year, and you're looking at close to 1.1 for FY25. Are you satisfied with all these numbers?
Absolutely. But it doesn't mean, that we rest on our laurels. There is more work to be done. There is scope for further improvement, whether it is for widening or for deepening the tax base. And we believe that that is possible in case we are able to further improve our taxpayer services, because that has a direct impact on compliance, as we have seen. The use of technology, again, is going to play a major role in this. So while we have achieved a high tax to GDP ratio, the highest ever, hopefully, this year, still 2 months to go, 11.6. Till now, we were at 11.1 last year. And next year, again, it will go up to 11.7 if the numbers pan out, the way we have projected. But there is a long way to go. It's not to say that there is not further scope for improvement. The more, we are able to use technology, the more we are able to have access to third-party information, the more we are able to simplify and rationalize our taxation system. We have seen its benefits on GST. The tax rates, in fact, have on most goods and services have gone down. And despite that, you see there is good revenue growth. The buoyancy over there has been about 1.25. 9.8% is the average growth rate of nominal GDP in the 4 years after the GST was introduced. And the growth rate of GST is 12.3%. So that gives us a ratio of 1.25% without increasing taxes. And so this is all basically the formalization of the economy, the digitization of our economy, of our taxation systems, and simplification for our taxpayers. And we hope to continue on that journey.
Great. You did talk about simplification, and if you're referring to GST, anything on cards in terms of further simplifying the whole regime? We were talking about a merger of certain tax brackets or trying and making it in a more systematic format. I know it's too early right now, but have the discussions been going on?
No. So first of all, this is not for me to talk about. This is the council's, the GST council's domain, which represents both the center and the state. This is an ongoing exercise. This is because we always, try to do a perfect job, but it doesn't happen. And there will always be scope for improvement as and when, we get feedback from our stakeholders. Case in point, being online gaming, we made those changes, and effective taxation, according to us, decreased. For the industry, of course, the way they interpreted it as an increase. So that has paid again, good dividends to us in terms of revenue. I think I did mention those numbers, but for the sake of your viewers, you are aware that we introduced the new taxation rules provisions with effect from 1st October. So it's been 3 months. In these 3 months, we have got revenues of about 3,470 crores, which means about 1,150 crore plus revenues per month. And you contrast it with the revenues of the previous 3 months before these provisions were introduced, which is July, August, and September. The revenues were only 608 crores. So this is an increase, or 200 crore per month, and now on to about 1,150 crore per month. So this is an increase of 475%. So this is an ongoing exercise, and proposals come from stakeholders, they come from industry, they come from the states, they come from our field formations. We look at them, and there is a fitment committee, there is a law committee which has been set up by the council, and they are deliberated by the council and a view is taken on them. This is an ongoing exercise.
Got it. And this is up for review, if I'm not wrong, in the month of March, because 6 months was the time that we were considering
for online gaming.
For online.
6 months. So after March, so 6 months will be complete, and then we'll again have a look as the council has decided.
Okay. So you did talk about widening your tax base, and what didn't make it to the announcement was the much expected that people talk about is the personal income tax and changes to that. What are you doing in terms of getting more and more people to the new tax regime? Because you would want more and more people to move to that, right?
Yeah, absolutely. So you are aware that the government is on record. Our finance minister, has mentioned it, that we would like to move towards a taxation scheme which is simple and easy for people to understand, and at the same time do away with the exemptions and the deductions. We did it in corporate tax with good results. 57% of revenue now comes insofar as the corporate tax is concerned from the new scheme. And similarly, the government would like a simplified regime for the personal income tax. You are aware that it was made attractive last year.
Yes.
A number of exemptions, a number of reliefs were given. The number of tax brackets were reduced. The rebate for the new tax scheme was increased. Then there was an increase in the exemption limit of gratuity for the non-government salaried class from 3 lakh to 25, 3 lakh to 30 lakh, if I remember correctly. And so, those changes were introduced just last year. Now to expect a change year on year, I don't think, it's so good for the taxpayers as well as for the tax authorities, because everyone needs, certain tax certainty. We need a tax stability. Let's see, what the impact of the new tax scheme is, and then take it on from there.
Yeah, but there is no sunset on it, right? There is a possibility.
Exactly. I mean, you are talking about the old scheme, I think. So while, we are making the more new scheme attractive, there is no sunset, there is no date that we have given that the old scheme will be closed. So that scheme, that's an option available to those who are willing to take it.
Got it. Mr. Malhotra, one last question. Just a day before budget, it was, of course, a custom duty cut was announced, which again, you've been vocal, was to more move towards the simplification. Now, one key, yet another expected simplification on agenda has been the long-term capital gains tax. And about 2 years back from now, it is the last budget that we were very hopeful that some kind of simplification could come in, because market really is watching that out. Has the department been discussing it?
First of all, let me say that the capital gains, tax, the long-term capital gains. I think you are alluding more towards the long-term capital gains tax, where we are having primarily two rates. One is 10%, mostly on the equities. And then, things like gold and real estate, where the rate is 20%. But people forget that this 20% is after giving the benefit of indexation due to inflation. So we did a study and we found out that over past say 30 years, if one takes if one takes into account the benefit of indexation, then the effective taxation is about 11%, which is not very different from the 10%. So from a revenue perspective, it's really a non-issue as to whether it should be 10 or whether it should be 20% with indexation. Similarly, the holding periods are different, 1 year, 2 year and 3 year in some cases. But this was an interim budget. As I said, simplification, rationalization is continuously, always on the agenda of the government. And whatever is needed to simplify and rationalize will be done at an appropriate time.
Got it. Simplification, rationalization, two keywords coming out as we end this interview. One quick question, and this is more from a macroeconomic perspective. The fiscal deficit for this year, of course, the revised estimate is at 5.8% instead of 5.9% because of strong dividends that we have seen, about close to 75,000 crore. Now, next year it's at about 5.1%. Isn't that slightly over-optimistic target? Because this year stands very important, not just for India, but globally in terms of the elections.
I would say it's going by, past trends. We have managed to achieve whatever has been said in the budget, and not only managed to achieve but overachieve. Whether it is in terms of revenue and whether it is in terms of the fiscal deficit, because we are improving it this year by about 0.1 percentage points. So it's a realistic target. We are very hopeful that we should achieve it. Of course, exogenous factors are something that we can't factor in.
Got it. Thank you very much. I think we meet again in about a few months from now, where the government will be yet presenting the next union budget, a full-fledged union budget for 2024-2025. Keep watching Business Today Television as we bring you more.